Do you work for a company that has digital revenue and you find that there's more than one version of the truth? Hi, my name's Alysha Randall. I am a fractional CFO and I also train aspiring and brand new finance directors that work in startups and scale-ups. So today I wanted to talk about, and you notice it wasn't included in the title, but I wanted to talk about triangular reconciliation. Not the most exciting topic, but it's something that I see go wrong a lot. And so I kind of feel like this is something that I wanted to talk about today. So what triangular reconciliation is you probably already know you obviously have to reconcile your bank. So that is one element of the triangular reconciliation, reconciling cash received with the bank, easy as. And then you have the cash received with your general ledger. So if say, for example, you do invoicing, then it would be the sales invoices matching the cash received. So that's kind of on the bottom. The bit that's often missing is the bit between the what you have in your internal systems. So, whether you're using HubSpot as a CRM or Salesforce or something like this, or if you have an internal data warehouse that is managing all of the billings, it's that piece that is often missing. So what I find, particularly, there's one company at the moment where we're really trying to tighten this up, is that the sales team have one version of the truth. Then you have the cash payments, which may or may not have an invoice, and then you have the general ledger, and it's just a bit of a mess. So we're trying to do this triangular reconciliation. If you're FCA regulated or a financial regulated company, then this method of triangular reconciliation is probably very familiar to you because you have to make sure every single day you know what's going on, particularly if you have client monies. But when you have a digital business, or sometimes even, not necessarily invoice, even if you're just doing sales invoices, old school business, you really need to tighten up what the sales team or the sales method believes that they have sold and what cash is received at the end of the day. And there's a couple of reasons for this. Obviously, the first one being you want one version of the truth. So, if you're creating board packs or you're doing presentations to the leadership team, what the finance function says has been sold and the revenue that has been had over a given period, the sales team commercial team say exactly the same thing. Otherwise, start losing some trust in the numbers, and that's not good for everyone. The other reason is often, if the sales team have triggered a sale, then the product or the service is going to be delivered to the customer. And if an invoice hasn't been raised or payment hasn't been made, then there's a severe disconnect and a service or product, particularly services, I find, is being delivered and it hasn't been paid for. And so then having to go back to the customer and ask for payment, uh, you may or may not get the payment, and it's not a very good experience for the customer. They're going to think that your business is quite disorganized, which is true, and it's not great for reputation. So there are a couple of reasons for this. And then also, it's affecting your cash flow, your working cash flow. So if you're paying for goods or services going out to the customer and you're not getting paid for it, then it's going to really affect your cash flow. So there's a lot of good reasons as to why you need to do this triangular reconciliation. Now, you may be thinking, oh, we've already got a pretty good process, nothing goes out the door, yada, yada, yada. And that may be true. Your process may be really good. And the chance of something, being sold to the customer without them paying for it may be next close to zero. However, it's still worthwhile doing this triangular reconciliation, not only because you'll understand that is true that it hasn't happened and the systems are working well, and therefore it's a very quick reconciliation. But it also then helps with the one set of numbers. You may find in this instances that the timing may be different. And so establishing when to recognize a particular revenue, there may be a nuance between the commercial team and the finance team. So doing that triangular reconciliation helps with that. And it's also good practice to do this. So again, you may have pretty good processes, but this is just another way of checking that your processes are working and that you only have one version of the truth. So yeah, a bit more of a practical, technical conversation today rather than specifically leadership skills. But as a leader, you are the one that sets the processes. You are the one that sets the policies. And if there is a huge issue between what the sales team take and the cash that's collected, then it's your responsibility and you're the one that's on the hook for that. So making sure that you tighten up that process with triangular reconciliations is really, really important. So hopefully that makes sense. I'll link the article below if you want to read that as well. And we also have loads of resources that you can download to help you on your leadership career within finance. So please do check those out as well. Thanks so much for watching, and I'll see you next week.